right now, just to kind of go over a continued lesson that we kind of talked about a little bit last week when we was talking about the bounce, right? So right now we're looking at the prices that are represented or that shows up when you look at individual price action for trend lines or support and resistance. Right now, we look at this chart from Amazon. We see that a couple of things that point out. One, this chart is on a daily at the time of this screen capture. Two, that the price action on this chart is at 8:10:32, and we also notice that there's this long line that goes across the screen here, right? Okay, so price is at 81 to 8:10:32. I know you're saying, well, how do we know that price is going to hit a particular point of support and resistance? We don't, because watching this price action, we see that on September 12th, the trend went in the opposite direction, going upward, right, up into the 840, 845 area, and so we see a stock peak right here. So because we didn't shrink this chart down at the particular time to see where the price was going to go, we only know, from just looking at the chart that it's here in the 840s. Well, then the chart starts to go down. The price action starts to drop further, right? Well, this line here is called a price level, and that's done independently within the application. A lot of times you can use applications like this that are online, like TradingView or other apps, to show that price levels, either to meet existing levels from previous levels, which could act as resistance or support. I apologize, from support here, because if this price drops all the way down, it's going to hit in this this 8-ish area here, right? So once it hits that area, that's called support, because it's 2 points and same price level, right? So we know that's support. But if it breaks through that support, now it's coming down lower to this next level of support, which is in that 790 area, right? So if we say, okay, wow, prices dropped all the way down, it's broken through 2 individual points of support, and so on and so forth, and it's continuing to fall. Well, now it's going to hit this majorly tested area here in 760, right? So we know with these different points here that that's what you're going to have. That's support, right? So let's go to the next chart so you can see why I said that. In this chart here, we have from MasterCard, it's on the 1 hour, which is a lot longer than the daily, or actually shorter than the daily. You see that on this chart, you have several areas where support is tested, right, on this chart. And again, to draw up support area, you typically need 3 to 4 points across a period of time on a chart. So you got support areas here, here, and here. Support areas here, 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 and here. Well, those support areas were tested each time those support areas were tested, price would bounce off of that, right? Just like the bounce, just like in the hallway, you have your floor, you have your ceiling. So your floor is represented by your support area, your ceiling is represented by resistance. That's right. So now you see something interesting happens right here. Wow, wait a minute. It bounced through the ceiling again. And now that resistance area has now become further support. If you see it here on your chart. Until it meets another resistance area here and bounces back and becomes support again. This happens a lot in the market, a lot with stocks and stuff, where you see support become resistance and resistance becomes support until it breaks through. It's hard to explain why that happens. A lot of times it's price related. A lot of times it could be news that drives price, but at the end of the day, it's still price action. Shouts out to my man over at Red Bulls, Green Bulls, Red Bears. So if you see here in these different areas, these are resistance areas up top. Resistance depending on what you follow. If you're a short trader, you're looking for prices to break through support. If you're a bull, you're only looking for uptrends and things like that, then you're looking for price to break through resistance, or you're looking for breakouts, out of consolidation. So since we're talking about consolidation, we have this price area here that's trading within this range, and it's between 470 and 460. You see how tight that is? If I drew another line here at the time, you would see that price hasn't broken through that resistance ceiling at all for what? 12 to 9, almost 2 weeks. And then all of a sudden, it drops back through the support and breaks out above that tight trading range, which is considered consolidation. It breaks out and goes up to a new area of support, which initially was resistance, right? So if you look at these 2 points here over the period of time of this chart, because you're trading off of this area here. You're not trading back here, but you're using this information to make the decision on what's going to happen further along. So again, this is an area of consolidation. And consolidation typically is tight trading range area. When it's real tight, you don't have a lot of movement. Old school cats call it the dead cat bounce. Older guys, newer guys in the game say it's just tight consolidation. And one of the questions is, well, how do you know where consolidation, what direction a stock is going to go in consolidation? To be honest with you, you don't. Consolidation is an example or shows the indecision in the market for buying and selling, and the prices are always real tight. So, they're making their money on spreads or, 1 or 2 pennies here, 3-4 cents at a time. It's a very dangerous area to trade in. I wouldn't advise any trader, even seasoned traders tend to tell you not to do that. But as we look further into this area of consolidation, you can see here, it's real tight across these lines right here, real tight in this area. And if you draw another line here, you will see that this is support resistance. And it's in that resistance area. It's tested multiple times. It even tried to break out of it, but then it came back and stayed in the support area. And this is that price action where it varies from time to time. But see, it hit that bounce off of the support area, bounced through. Now this new area of what was resistance here has now become support in this area here. And the process continues further until you have a full test at the resistance area. It may break through both areas of support here and come all the way back down and start the process all over again. A breakthrough, bam, up through support, up through resistance. Now it's all the way back down. Now, since we're talking about this in brief and we're looking at different points, we have trend lines, right? So your trend lines, again, are multiple points on the chart where you could say, okay, this is going to help me determine what direction the market is going, or that particular, not market per se, but this particular stock. So we're looking at a Microsoft stock here on a 1 week chart, a weekly chart. A weekly chart, again, is a broader view than a daily chart. It's more based on your monthly action, and depending on the time and how you like to trade. If you're a swing trader, it can help you make for your long-term decisions. So here it's April, July. You have a point here. Trend is still moving upward. You have a point here that connects. You have another point here, and you have another point here. So a lot of times what happens is that when we're making these trades and we're looking at these types of things, we're noticing that, hey, there's an area of support that's being reached as this stock trends upward. And we're noticing that. We're saying, okay, it's going up, going down, but it's not breaking that trend line. And that's what you can use to make it your purchase decision or sell decision moving in the next chart. But you notice one of the things that we definitely talked about in the previous slide, areas of consolidation, areas of consolidation, areas of consolidation. And a lot of times areas of consolidation usually, can determine whether the stock's going to break out above it or break out below it. That's why it's always a dangerous place to trade from. Here's an example of the chart going in the other direction, or trend line in the other direction. Still, we have multiple contact points in the direction of this chart, but at the start of all this, guess what? Consolidated area. And this was a downward trend. So this stock continued downward, and this is Yahoo on the weekly, continued downward since July 2015 all the way to early part of this year. And it said, okay, I'm going to reverse and go in the other direction. But as you notice, stock reversed here, went upward, area consolidation, and went up again, broke through that support and resistance, became resistance again, and the new support became resistance, bam, broke through that resistance, and another area of consolidation. So at the time of these charts, this is what the price was, 42.38. Again, this is just me highlighting it. You see here, this is a further detailed view of what support and resistance areas exist in that particular chart that we just looked at. So you see your support areas here. They're being tested multiple times, and you even have a support resistance area of this greater area in the chart here. And these wicks represent a price movement in a direction, but guess what? It didn't break it. So, you know, where the actual candle closed determined how the price action behaved. Now, in this final chart here, we have what's called a channel, an upward channel. An upward channel still work the same as trend lines, but they give you more of a directional scope of how the chart actually trades, because you can still have support and resistance, not just from left to right, but, you know, from upward or downward. You can have an upward trend channel, or in some applications, like I used to think of swim, you can use standard deviation channels, which gives you just a general consistency of how the market is, or that particular stock is moving in the channel or test areas of support and resistance are, or where they are in that in the price action for those charts. So here you see price drop down to this 480 area, bounced off of that, and then came back and went up higher. And even if you wanted to draw a line here, you still would see that support and resistance between these two stocks as it broke out above it. And then guess what? You had an area of consolidation. A lot of times it helps to use channels when you have just too much consolidation going on in a particular chart, or you have a lot of, you see that consolidation right there? Or you have a lot of gaps. You know, it really does help a lot, you know, a lot of times. So, you know, trade carefully, you know, always get the advice of a licensed broker or someone in the financial industry. Just be careful out there in the market, man. Good luck to you. And I'm ReeesTrades. Don't forget to check us out on our YouTube and Twitter channel. And if you're tuned in now, thank you. And stay tuned for our next video.